Welcome back to Market Fatafat, a show where we are highlighting all the counters that are buzzing either on the back of the news flow or on the back of the technicals. And with this, let me welcome on board Kunal Rambhia on the technical side. Very good afternoon, Kunal, and thank you so much for your time. Coming to you for the first counter, that is New India Assurance. Tell us, how is the chart looking like for this one? Because the stock is showing decent move in today's trading session.
Hi, good afternoon. So if you look at the overall formation of New India Assurance, we have been discussing this counter since quite a long time. It's making a clear higher top, higher bottom formation, and it's giving a good range breakout in today's trading session. So yes, one can initiate a buy at the present level, keep the stop loss of 150 on a closing basis, and the first target can be 165 followed by 175.
Okay, 165 followed by 175 are the targets coming in from New India Assurance from Kunal Rambhia. But let's move on and talk about Persistent Systems. Lisa, why is this one on focus today? What's the news flow for this mid-cap IT name?
So it has launched a software called Open Source Maintenance Service, and it's a first of its kind for Persistent System. So it will help the organization, for their open source software. It will help them in bug fixes as well as patches, and also incorporate the latest software releases very seamlessly in their system. So Persistent has also partnered with Lineage, which is a leading expert in software supply chain security management, to integrate this technology. So yes, we can see Persistent, it's gaining on the back of this announcement of its launch of its first of its kind open source maintenance software system, and it's up around 1.4% in today's trading session.
Okay, keeping an eye out on Persistent Systems, trading with gains of 1.4 to 1.5% as of now. Let's move on and talk about Mankind Pharma. Why is Mankind Pharma on focus today? We have Mankind Pharma that is added to the FTSE all world and all cap indices. The adjustment will take place on 15th of December, and this is as per IIFL. Now they're saying the flows of around 30 million are expected to come in for Mankind Pharma. Mankind Pharma inflows will be at around 28 million. This is what is expected by IIFL. Let's keep an eye out on that, because with this inclusion coming into the FTSE all world and all cap indices, we could see inflows coming in for the stock, and on the back of this we're seeing a run up coming in for Mankind Pharma, trading with gains of almost 4% as of now. Yes, off the day's highest point, but nonetheless gains of 4% for Mankind Pharma.
Okay, moving on then, let's shift focus to Bajaj Finance. And Ansh, this particular counter has been in the news for a couple of days now. Tell us the latest news flow here now.
Down around 2% in trade today. The company has said to the exchanges that they have suspended the issuance of existing member identification card, that is EMI card, on a temporary basis to new customers. Now this suspension will be in effect till the deficiency observed by the RBI are rectified to their satisfaction. However, the company continues to offer financing to new and existing customers at the dealer store in the normal course of business. Also, if you see the stock chart, stock has corrected over 12 to 13% from its record high, which was seen last month only.
Okay, moving on then, let's shift focus to L&T Tech from the IT space. This counter is in focus as the company has announced that they have collaborated with NVIDIA to unveil the Gen AI and advanced software defined architecture for medical devices. They have announced this collaboration with the well-known firm in the AI-driven technologies, that is NVIDIA, as well as they have also said that the medical devices will focus on endoscopy, which will enhance the image quality and the scalability of the products. And on the back of this announcement, the stock is in focus and holding a gains of 1.4% as of now.
Okay, that is L&T Tech for you all. Let's move on and talk about Nalco on the charts at number 24. And Kunal, Nalco, when you look at it in the last 1 month at least, specifically, seems like there's a correction that has come in this stock. Is it a good time to enter Nalco now at 93 levels, or are you expecting a bit more of a correction?
Certainly, yes. This is a counter which is a trending counter, and we have been discussing since almost May or June of this year. Every decline is a buying opportunity, because on the weekly chart, it's a perfect trending counter. Now, if we come to the daily chart, it's been 4 days. The counter is showing a massive volumes on the buying side, and there's no volume when the counter is correcting. So I think this seems to be a perfect sign of accumulation happening on the chart. So one can initiate a buy at the present level, keep accumulating even if it comes to 91. A positional stop loss on this can be 88, and the first conservative target on this can be 97, and we'll again keep revising the targets on the higher side, and we'll keep trailing the stop loss as the counter begins its move.
Advice coming in to accumulate on Nalco as of now, but let's shift focus to Paytm then. And these are in a weak market. Paytm is holding on to the gains of 1%. Tell us what's the news flow here.
Right, so it's a report coming in from BofA Security. They have maintained a buy on Paytm with the target price of 1,165. Now this entails a 30% upside from its current market price, and they have said that they have given this buy rating, and the rationale behind this is that they find the risk reward for Paytm quite favorable, and they also find Paytm quite well placed in its space. But the risk, however, it's looming on its loan growth. There is some loan growth slowdown, but the overall impact is quite minimal, because the impact will mainly be on the personal loans and not on the merchant and BNPL segment, which they have a higher share in. And talking about the triggers going forward, they said that any growth, better than expected growth, and also more partnership coming in for Paytm, more partner signing in for Paytm, that would be a key trigger positively for Paytm, and that is why we can see Paytm is up around 1% in today's session.
Surely keeping an eye out on Paytm today. Let's move on and talk about Aurobindo Pharma. Ansh, why is this one in focus? What's the news flow that we're picking up for this pharma company?
So US FDA had conducted a pre-approval inspection at formulation manufacturing facility of APL Healthcare, which is a wholly owned subsidiary of the company situated in Telangana. Inspection was undertaken between 13th and 17th November, and the inspection closed with 0 observations. In addition to that, inspection was classified as no action indicated, which means no objection, condition or practices were found during the inspection. Also, if you see the stock chart, stock has touched 2-year high today, but because of market volatility, stock seems to be trading in red now. Also, the stock is just 5 to 6% away from record high, which we had seen in mid-2021.
Okay, moving on then, and let's shift focus to Emphasis then. And Kunal, with along all the IT names, are you bullish on Emphasis? Is that a long call coming in on this one?
Absolutely. So if you look at the recent performance of Emphasis the previous week, we saw a uptake of around almost 8.5% on a closing basis. It's been 2 days, the counter is in sideways consolidation, and if you look at the hourly chart, it's showing a flag formation. So the breakout of this chart is already placed at around 2365. Counter is trading near to that level because in the morning it gave a breakout. It's retesting the breakout zone. So it's a bargain buying opportunity. Yes, one can initiate a buy at the present level. The stop loss will be 2300, and the first target on this can be now 2450 and followed by 2500.
Okay, 2450, 2500 levels to keep an eye out for Emphasis. Let's move on and talk about the next couple of stocks that we have in focus, and that's coming in from the EMS and IT hardware side. Is why? Because Mr. Ashwini Vaishnav over the weekend actually spoke about the PLI2 for the IT hardware, where 27 companies have actually been awarded and included in this PLI2 schemes as well. Some of the names that have come in: Zakeen's Technology, Optimus, as well as Sirma SGS, Pageit, which is the subsidiary of Dixon Tech as well. So these are the names that are included in this IT hardware PLI scheme that is coming in as well. And 23 of these companies are ready to start the manufacturing from day zero. That's the word coming in. 4 companies will start within 90 days. So these 27 companies will lead to around 3,000 crore rupees and direct employment of around 50,000, indirect employment of around 1,50,000 as well. That's what Ashwini Vaishnav said when he spoke about the PLI2 scheme as well. And earlier also, as many as 40 companies were included. They included Dell, HP, Lenovo that had applied for the IT hardware PLI scheme as well, with a commitment for personal computers, laptops, tablets, as well as servers and other equipments as well. So on the back of this PLI scheme that has come out, all the names of these players that have come out as well, whether you look at Sirma SGS, Optimus, as well as Pageit, which is Dixon Tech's arm, all these stocks are in focus. Even an ITI is in focus as well. But we also spoke to Sanjay Lodha, who's the chairman and managing director at NetWeb Technologies. Their name was also there in the PLI scheme. Let's go across and listen into what they believe in terms of PLI2. How is it different from the earlier PLI? What are the benefits that we could expect for the company going forward?
PLI 2.0 is particularly a very good step in that direction after PLI 1.0, wherein the incentives are more. And you see the number of participants have increased and the number of companies who are trying to get into it is also quite high. So there is a good momentum around that. And with the onslaught of the adoption of artificial intelligence, I think servers and basically high-end computing is very important. And with looking at the security threat and all, local manufacturing, electronic manufacturing of high-end servers, and basically the other electronic equipments is gaining a lot of momentum. And I think it's very important for the country. And this policy really puts a very good step in that direction. I think investments you're already seeing since this manufacturing will happen. So the investments has to happen into the country. We went through an IPO 4 months back actually, wherein we had committed that we will set up we were already into the manufacturing already. We are one of the companies who are manufacturing their designing and manufacturing our server motherboards in India. So basically we had said that our new facility will come up in 25, but seeing the momentum of PLI 2.0 and the kind of things basically which are in front of us and the adoption of artificial intelligence, we have sped up our process of manufacturing, and basically our new line, I'm pleased to say that our new line will be basically in production 1 year in advance by the end of this current financial year.
Okay, moving on then, let's shift focus to Jubilant FoodWorks, which is one of the counters that is in news on the back of a resignation of a key managerial person, that is the CFO of the company. The company has announced that the CFO, Mr. Ashish Goenka, and who was also the president, has resigned from the services of the company being a CFO. Along with that, the last working day of Mr. Ashish will be 15th of December 2023, and not just that, the reason that the company has given that he will go ahead to explore different opportunities outside the organization. That is the reason that the company is citing for this particular resignation. And on the back of this news flow, we are seeing the stock down in trade with a cuts of around 1.5% after the resignation of the CFO was announced with a BSE disclosure.
Okay, surely keeping an eye out on this Jubilant FoodWorks, how and who will be the new CFO, all that is one to watch out for as well. But let's move on, and to the next stock we have Kunal. TCS is the stock that you have picked out for us from the IT pack. Where do you see TCS headed from here on? We have seen these large cap IT names not do anything much. So, TCS now an attractive bet that you believe?
Yeah, certainly yes. So if you look at the recent correction, the counter came down from almost 3,700 to the lows of around 3,300, and it's offering a good bargain buying opportunity so far, because from the bottom levels, which was the extreme support level, it has bounced really good, almost 4.5%, now in sideways consolidation. So one can initiate a buy at the present level. The stop loss can be 34.80 to 34.75 kind of, and the first target on this can be 36.50 to 3700.
Okay, moving on then, and let's shift focus to L&T, though this counter is in the red as of now. Lisa, there's a positive news flow coming in on L&T. Tell us more about that.
Yes, it's a report by Bernstein. They have come out with a positive report on L&T. Actually, they are focusing more on the Saudi Arabia kingdom, which is transforming. The government is focusing not only on oil but also on the non-oil business. And remember that L&T had received a lot of mega-sized order in the last few months from Saudi Arabia. So yes, they have maintained an outperform on the stock at a target price of 3,268 on the back of this. And they said that since initiation of L&T, Bernstein had initiated on L&T way back in 2016, and the biggest underestimation has been the transformation of infra as well as energy segment in the Middle East, and the non-oil revenue has also grown at a CAGR of 12% versus 5% before 2016, that is from 2008 to 2016. So they are very positive on L&T basis the Saudi Arabia kingdom, which is transforming and which will benefit L&T in the long term.
Okay, surely keeping an eye out on that one. But let's move on and talk about Elecon Engineering then. Anshan, why have you picked out this one for us? What's the reason for this being in news today?
So the stock is up 1% in trade today, and the company has incorporated Elecon Radicon Africa, a wholly owned subsidiary in South Africa having a share capital of 1,000 South African rand. This move is set to play a key role in company's expansion strategy. This subsidiary will focus on sales, marketing and servicing of industrial engineering products. This move will make sure company's commitment to broadening its international footprint and leveraging opportunities in the global market. Also, if we see the stock chart, stock seems to have given a breakout from a downward sloping resistance trend line. So for those reasons, the stock is in focus today.
Okay, moving on then, and Kunal, the next counter that you have picked up is Latent View. Tell us how the chart's looking like for this particular name.
This counter made a high of around 360 somewhere in the month of September. From there, we saw a decisive correction to almost 400 levels. And in today's session, it's up by around 8.5 to 9%, trading at near 448 to 449. And if you look at the volumes of the day, they are highest since last 6 to 7 months, which clearly shows that the decent accumulation is happening, and the chart is anyway showing an uptrend since May to June 2023 so far. So considering all these observations, I think one can initiate a buy at the present level. The stop loss can be 430. It's only because of the massive up move of the day. It's a little far away from the present level. 430 can be a good stop loss, and the target on this can be now 545 to 550 level.
Okay, moving on then, let's shift focus to one tire name which is seeing a sharp cut in today's trading session, and that is Balakrishna Industries, where Antique has come out with a note and they have gone ahead and not just downgraded the rating on this particular counter but has also cut the target price. From a hold rating earlier, they are now giving it to a sell rating and have slashed the target price from 2352 rupees to 2220 rupees. And the reason that they are citing is that the last quarter has been quite good for all these tire companies. We have seen the margin expansion happening as well as the demand outlook was good, but going ahead they have a cautious outlook on Balakrishna Industries. In terms of the outlook, they believe that the replacement demand, though is stable across the categories, the demand from the OEMs could moderate in the near term post the festive highs, and the export markets are still muted, though they expect some gradual recovery going ahead. The margins for Balakrishna Industries are expected to be quite range bound owing to the stable and increasing in the raw material prices, and they have cut and slashed the target EPS estimate for Balakrishna Industries by 2 to 5%, driven by the cut in their revenues, and that's why the stock is in focus and down about more than 5% in today's trading session.
Okay, let's move on and talk about the next stock that is in focus, and that is a newly listed company, Honasa Consumers. And Lisa, this one has seen a very sharp up move coming in, 10% uptick as of now for the stock, and at the highest level since the listing times that we've seen coming in. What is the reason for this buzz?
On the back of a report by Jefferies, they have come out with a report maintaining a buy on the stock at a target price of around 520. Now, this entails an upside of more than 40% from the current market price. Now, what is Jefferies highlighting is that the investors, they are appreciating Honasa's track record, but debates are still going on around the growth, margins, competition and the offline segment as well. Also, they have mentioned that FMCG incumbents are probably trying to tilt more towards profitability rather than growth, and they see Honasa's growth priority as a big positive. And they added that margins should converge with the peers going forward over long term, and management they go forward with their growth strategy, so that will augur well for Honasa Consumers. So they expect the key investors to be patient with the stock as Honasa looks good in the long term.
Okay, that was about Honasa Consumers then, but Kunal, Strides Pharma is the counter that you have picked up from the pharma space, but clearly on the technical front we are seeing the interest in the IT as well as the pharma space. So Kunal, tell us more about Strides Pharma. The stock has already seen good run up in the past 6 months.
So if you look at the counter, yes, in the past 6 months the counter really witnessed a good buying interest, but at the same time counter has corrected decently from those 560 levels to almost 485, and it's been almost 10 days the counter is in sideways consolidation. Now, interesting observation here is that in the yesterday's session, that was on Friday's session till today, the counter rallied from almost 470 to 495, and the volumes have again been extremely high compared to last 2 months. So that clearly shows the accumulation happening. The counter is right now down to retest the breakout zone of 485. So one can initiate a buy at the present level. The stop loss on this can be 475 and the first target can be 525.
Strides Pharma can be 525. That's the word coming in from Kunal on Strides Pharma. Let's keep an eye out on that level. But moving on, and Ansh, you've picked out another pharma company, Cipla. Why is this one in focus?
So in a strategic move, company has recently taken a significant step by executing a facility demand guarantee of around 945 million South African rand in favor of First Rand Bank. This substantial financial commitment is aimed at facilitating and extending general banking facilities to Medpro Pharma. It's noteworthy that Medpro Pharma operates as a step-down wholly-owned subsidiary of the company in South Africa. As the pharma sector continues to evolve, Cipla's strategic financial decisions like this are set to play an important role in shaping company's growth trajectory on the broader healthcare industry. Also, if we see the chart, stock is just 2 to 3% away from record high.
Okay, that's the news flow on Cipla, but a banking counter then, and Kunal, that's the IDBI Bank, though the banking names are showing quite muted move in today's trading session. What specifically on IDBI Bank are you looking at?
So again, this counter is in trend since June 2022. It's reaching that extreme support level, which is placed at around 62 levels. Presently, it's trading at 61.95. So yes, one can initiate a buy. It's a bargain buying opportunity. It's muted counter, but only because the risk reward ratio is favorable, we are initiating a buy at the present level. The stop loss on this can be 60, and the first target, once it turns around, can be 65 followed by 72.
Okay, keep an eye out on those levels for IDBI Bank. Let's move on, talk about Dalmia Bharat Sugar, then Ansha, and why we picked up this stock in focus, and what's the news flow?
So the company has encountered operational disruptions at its Kolhapur and Ninai Devi units, both located in the state of Maharashtra. These disruptions have arisen due to ongoing farmers' Sangathan agitation in the region. The company anticipates that these disturbances might have some material impact on the company's operations. In response to the challenges faced, Dalmia Bharat Sugar is proactively taking all possible steps to restore its all operations to the normal state. The company understands the importance of keeping stakeholders informed during such situations and commits to providing regular updates on this. Despite the current challenges, Dalmia Bharat Sugar is focused in overcoming these hurdles and ensuring the continuity of its operations.
That was about Dalmia Bharat Sugars, but moving on, the all-in-one insurance product Bima Vistar launch in January 2024 may get delayed as the GST Council has yet not decided on the 0% GST on the product. ET now has learned from the sources that IRDAI and Finance Ministry are in the favor of no GST, but final decision by the GST Council has to be taken. Anurag Shah has more details on this one. Take it away, Anurag.
So the game changer all-in-one standard insurance product Bima Vistar is the launch may get delayed from 1st January 2024 because the IRDA want this product to be 0% GST. This product should be exempted from present that 18% GST which is charged on the all other insurance products. But that decision can only be taken with by GST Council, and GST Council has meeting has not decided because now presently the state elections are going on, and the GST Council meeting can happen only after the completion of the state election and the results. So the launch can get delayed because of this situation. As per our sources, Finance Ministry and IRDA has agreed on the exemption of GST from this all-in-one product, the Bima Vistar product, which has designed to have a life insurance coverage, health insurance coverage, personal accident and property insurance coverage. So as per our sources, the premium of this product will be between the range of 800 to 1200 per year, and which will give a coverage of life insurance for 2 lakh rupees, personal accident for 2 lakh, and property insurance 1 lakh, and there will be a component of hospi cash in form of health insurance. So once somebody get admitted in the hospital, per day the hospi cash will be given in form of the claim. So this product has been designed by IRDA, but the launch is getting delayed because GST Council is yet to decide on the GST rate which has been proposed 0%. That means no GST will be laid on this product.
Okay, so maybe a delay that could come in the Bima Vistar launch. Thank you so much for that, Anurag, for joining in with us and giving us more details on that. But with that, we are absolutely out of time on this edition of Market Fatafat on ET Now. And thank you so much, actually, Kunal, as well as Ansh and Lisa for joining in with us as well. And it's a goodbye from Shrishti, myself, as well as the team who put this show together.